All right, let's get right into it. We're all getting hit with these online promises of getting rich quick, but you know what? The data tells a completely different story. So in this explainer, we're going to cut through the noise and investigate what actually works based on the hard numbers.
You know exactly what I'm talking about, right? The day trading gurus flashing cash on Instagram, the house flippers on TV, and then there's that other path, the quiet, almost boring one, long-term investing. Well, the data on which one really builds wealth, it's honestly shocking. So it makes you wonder, are you on the right path?
So let's start our investigation right where all the hype is. We're going to dig into the numbers behind these really popular promises, starting with day trading and real estate flipping.
Okay, this slide is it's brutal. When you look at multiple studies from brokerages themselves, over a 5-year stretch, a staggering 97% of day traders lose money. Just think about that. Only a tiny 3%, maybe even less, actually make a consistent profit. Your odds are literally better getting into Harvard.
So why? Why is the failure rate just so insane? Well, the whole system is kind of stacked against the little guy. First, 80% of traders just quit within 2 years, so we only ever hear from the handful of lucky survivors. Second, every single trade you make gets hit with costs and short-term taxes that just eat away at any money you might make. And finally, our own brains work against us. Studies show we're way more likely to sell our winning stocks way too early, basically shooting ourselves in the foot. All right, what about flipping houses? I mean, the TV shows make it look like a cakewalk, right? You see this big headline number, $62,000 in gross profit. But that's not even close to what you actually put in your pocket. Once you start subtracting all the real-world costs, closing costs, commissions, interest, renovations, and of course taxes, that big number just shrinks. In a lot of real cases, it drops to under 20 grand. That's not a wealth-building machine. It's a super high-stress job. Okay, so if the flashy, high-risk stuff is really just a high-risk job, what's the alternative? Let's switch gears and look at the proven path. I know it might look boring on the surface, but trust me, the results are, well, they're anything but.
This right here, this is the engine of real wealth. It's called compounding. Let's just say you start with 10 grand and get a pretty standard 10% return. In 10 years, that's over 25,000. Not bad. But now look what happens over 20 years, and then 30. The growth just explodes. It goes vertical. It proves that time in the market, not timing the market, is the most powerful weapon you have. It's like gravity for your money.
So let's just lay it all out side by side. The difference is it's night and day. The proven path, long-term investing, has a 90 to 95% success rate if you stick with it. Compare that to the 1 to 4% for day trading. Your wealth builds exponentially, it compounds instead of being this stressful grind. And maybe most importantly, it's way more tax efficient, so you keep more of your money working for you. The risk of losing everything, it's incredibly high with the active stuff and incredibly low when you just give it time.
Now you might be asking, is there a way to hit the gas on this? And the answer is yes, but here's the secret. It's not by taking on crazier investment risks, it's by making more money to invest in the first place. Owning a high-margin business, think software or consulting, stuff where a big chunk of the revenue is pure profit, that's how you generate serious capital to pour into that boring, long-term portfolio and really supercharge it.
But here's the thing, the financial strategy is really only half the battle. All the research shows this stuff only works if you pair it with a very specific way of thinking. So let's dive into this philosophy of what's called quiet wealth.
Quiet wealth is a really simple but powerful concept. It's about being truly financially secure without needing to show it off. The goal isn't the Lambo or the giant mansion. The real goal is freedom. Freedom of your time, freedom from worrying about bills, freedom to make choices because you want to, not because you have to.
And that freedom? It's built on a set of really clear habits. These people actually define what enough means to them, which stops them from chasing more and more forever. They spend their money on things that actually improve their lives, not on things to impress other people. They get good at delaying gratification, they protect their time like it's gold, and they automate all the boring stuff, the saving and investing, so it just happens. And they see consumer debt for what it is, the enemy of freedom. It's a whole different way of life.
And what's so cool is that none of this is actually new. These are just modern versions of ancient wisdom. The Japanese have a practice called kakebo for mindful budgeting that's a century old. The Jewish Talmud has principles on diversifying your assets that's basically ancient portfolio theory. And you see it in the high savings rates in many Asian American communities that fuel all this long-term growth. These ideas have been working for generations.
So let's bring it all home. After looking at all the data, all the strategies, and the mindset behind it all, what's the actual bottom line difference between these two paths? Well, the final numbers are going to blow you away.
Okay, so after 20 years of that high-stress grind, day trading, flipping houses, running a business that takes up all your time, the median person on this path ends up with a net worth of around $500,000. And a lot of that money is stuck in a business they can't easily walk away from.
Now, compare that to the proven path. The median person who just consistently invests, maybe buys a rental property every few years, builds a solid side business, over the same 20 years, they build a net worth of almost $7 million. That is nearly 14 times more wealth, and a huge chunk of it is generating income while they sleep.
And that brings us to our final verdict, which really just synthesizes all the data we've looked at. The data is unequivocal. The median practitioner of the proven path achieves millionaire status with passive income. The median practitioner of the active path struggles to exceed $500,000 after 20 years of work.
So at the end of the day, it all boils down to this. The popular path, the one that's all over social media, creates a high-stress, high-risk job for yourself. The proven path, the boring one, creates actual, real financial freedom. The choice of which one you're going to build is yours.